And so it's very, 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 very difficult to do what he has done with his fund over these past 20 years. And that's why there's only one Ron Barron, because it's very hard to do.
Ron Barron, he was interviewed at CNBC. There's a few things that he said that was quite interesting. Specifically, of course, the big topic
Ron never has anything interesting to say about Tesla, so I don't know why we would do such a thing.
He's always positive about Elon, but he did say something about how he thinks Elon should not be necessarily in politics. Now, you got to listen to what he actually says. He's very defensive. He agrees that Elon should be doing this, but in general. So let's listen into what he said here.
You have been a longtime believer in Tesla, a longtime believer in Elon Musk, and you've been right. The numbers that you've kind of come on here and talked about, we've headed $1 trillion and over. The market cap is now back at $715 billion, but market cap was above $1 trillion. You had said $2 trillion when people thought it was crazy. It doesn't look so crazy anymore. A lot of the things you said have all happened, and it's because you've been a believer in Elon Musk. I would add that there's a third consideration in the stock market right now, though, too, and that's that Elon Musk has gotten so associated with Donald Trump and with Republicans and with Make America Great Again, that it has led to blowback in some areas. In Europe, sales are down 45% in some areas. There have been cases of vandalism, even terrorism, against the cyber trucks, against Tesla cars, against some of the factories that are out there. That's a pushback. And I think of Warren Buffett, who used to say that just because he is the CEO, that doesn't mean he has to check his political beliefs at the door. That's what he always said, and he was always pretty outspoken on things. But several years ago, many years ago, he changed his mind on that and said he was going to keep his political beliefs a little more to himself because he didn't want the impact of people who disagreed with him to come back on Berkshire. Do you think that this is helpful to the stock with what he's doing right now? Do you think does it concern you that he's spending more time at Doge than he is at Tesla?
So my advice has always been to avoid politics. I don't like talking to you guys about politics. I don't think corporate executives, I don't think that's the best use. But he believes this is really important for our country. So remember, ChatGPT, that was founded by him.
Yeah.
And he put up the money for it in a non-profit organization. That's worth $350 billion. He walked away from that because he wasn't convinced. In fact, he was convinced the opposite, that this was going to be bad for humanity. He was worried about humanity, so he gave up his interest in ChatGPT, although they offered it to him again, but he does not care for the person who's running it, Sam Altman.
Yeah.
Doesn't trust him. So basically, I don't think it's a great thing to alienate half the population. On the other hand, he believes that digitization and autonomy is going to be driving the future, and he thinks we're on the verge of having an era of incredible abundance. So he's setting it up for that. And then in addition to that, what he believes is that in order for the planet Earth to survive, that America has to be militarily strong. And the only way you can be militarily strong is you can't be financially weak. So what he's trying to do is set it up so that you'll be financially strong, and then you can be militarily strong, and that's going to protect the planet, he believes. And I agree with that. So I think there's, I would hope that he would be a little less visible, but he feels that this is the way he's going to get things done. And he's been uncovering unbelievable things, and I think will be successful.
How often should you expect SpaceX to have these issues? And you see the celebration from the Elon haters when it's sick, but they actually chortle and sort of laugh about the two recent incidents. But Elon, he's right. Rockets are hard, but this is all. There was a time in Elon's life where he would have. If a launch had failed, he would have been bankrupt. I think he's recounted that story before.
3 different times.
Yeah, so this happens.
Sleeping on the floor.
Are things going along fine with SpaceX?
I ask about that regularly. I ask about succession. I ask about how the management is going and whether he's showing up. And he is showing up. I mean, unbelievable that he's doing all the things he has in Washington. And I was talking with someone who was a financial executive of SpaceX, I guess last week, and she was telling me that when there's an issue with something like Starship, which isn't working yet, but making incredible progress. There might be 3 meetings a week. He's in every one of the meetings. And then when it's Falcon, that's going great. So he's there for a short time. And if it's Starlink or a Star, for the defending of our country, he's there for those meetings too. But he's there all the time. I said, so you're a financial person. What are you doing there? And so she says, well, what we do is we give him a deck, and he goes through the deck, presumably, but maybe he doesn't, because maybe he knows all this stuff already. And we ask questions. So why are you in this meeting? You're a financial person. Well, I'm there because we give him the options. This is what this is going to be. This is one solution. And she says, I'm the one who figures out how much everything's going to cost. He shows up at all these meetings, and everyone tells me the same thing. He is more charged up about his business now than he's ever been. And there are all these when you talk about the fundamentals, there are all these new products that are coming out right now. In the middle of the year, you're going to start seeing new products, new refreshes. When you talk about Europe sales being down 40 or 50%, that's you don't have any cars. They're not making them. They're not making them because they're going from the Model Y, which is the best-selling car on the planet, 1.2 million cars a year, to not making them. And so how are you going to have up sales when the car that's driving your business isn't being made? And so that's what's happening, and you're starting to make them now in the refresh model. And as you see pictures of people saying, man, this is a great, incredible car.
Yeah, so great comments by Ron. A couple things, though, that I liked very much. One was he said that he always asks about succession. Elon does show up all the time. And then he said that he wishes he wasn't as visible in politics, but it's important. What did you take from what Ron is saying?
Well, I always love Ron's takes. And so, my comments earlier were definitely sarcastic. Ron is one of the investors in the public markets who I think is going to go down as one of the greats. He has a track record that rivals Peter Lynch, and he's one of the only investors on Wall Street who has understood the fact that you need to invest in generational companies, and then you need to just hold those companies throughout, the life cycle as they execute on these plans. And that as long as their ability to manage their business and execute technically continue, that you continue to hold those companies. And that has driven a lot of performance. He's, one of the only fund managers who's an actual stock picker who has outperformed the S&P 500 consistently over long periods of time, and is exceptional. So he has incredible discretion as an investor, and incredible analysis. And for my money, he's a far better person that if you want to diversify your holdings in innovation, I would pick a Ron Barron fund over a Kathy Ark fund, or, just a Gary Black fund, or any of these other people who like to have mutual funds or ETFs that are diversified in innovation. Ron Barron really outperforms those people in the long run, and it's because he understands these things. So when it comes down to the political arena, I think him and Warren, would both land at this point in time on corporate leaders really being less visible in their political dealings. That doesn't mean that they are not involved in political things, but that you don't necessarily have to do everything that you're going to do out in public, and you can shield the companies that you work with from some of that blowback that kind of inevitably comes when you're in the public eye. And I think that is generally the correct advice in the vast majority of situations. For Elon, it is a question. Could he accomplish what he's accomplishing without being in the public eye? I don't know if that's possible for Elon on two fronts. First of all, I don't know if it's possible technically, but then on the second front, I don't know that that's possible for Elon personality-wise, that this is just how he does things. And so it is one of the things that if you want to be invested in an Elon company over the long stretch, that you have to go along for the ride when he is in the public spotlight, pushing back on things. And there is a lot of times some pain that is associated with that. For those of us who've been doing this for a while now, we've experienced that through, the FUD years in 2018. For people like you that have been in for even longer, there was quite a bit of media coverage back in 2012 that was very anti-Tesla and anti-Elon as well. And that, you kind of go through these cycles of media coverage where he's either the best thing ever since sliced bread because the stock is way up and people are enamored with him, or he's the worst thing ever because the stock is down or because it hasn't delivered on expectations yet. And so there's a certain element of it that's just that cycle that continues to play out. And, we go up and down on the seesaw as long-term holders. But then each time we go through this cycle, it does, he's got a larger audience. The things that he's doing have greater global impact. And so the stage keeps getting larger and larger and larger. And so I think that is something that people just need to be prepared for, that, this is probably not the last cycle that Elon is going to go through either. And the next cycle will probably be as big, or if not even bigger than this cycle with Doge. And if you really want to see him deliver on his missions of making life multiplanetary or completely transitioning the world over to a sustainable energy economy, that we haven't fully realized either of those goals yet. And it's going to take enough time to realize them that we're probably going to have to go through a few more cycles of very, very, very public and uncomfortable seasons of time with Elon Musk's public image.
That's the beginning. Let's listen into the second clip from Ron Barron. Says that I'll be the last in, I'll be the last out.
Ron, very quickly, you did sell more shares of Tesla in the second quarter last year, 1.7 million shares roughly, 1.8 maybe. That's the second time I recall of you selling shares. I remember you joined us back in 2021, in March of 2021, after you had sold about a similar percentage. At the time, you said it wasn't that you didn't love Tesla, but it was getting to be too big of a position in your funds. Was this the same story in the second quarter?
Same story in the second quarter, and we sold maybe 5% more last month. Okay. So I think we probably have somewhere around 2/3 of the stock that we bought in 2014 to 16. Mm-hmm. And so everyone, I didn't sell any personally. Mm-hmm. And so everyone, has to, with certain clientele. And I deal with the critiques of my clientele for how large the positions are. And if they get very large, right now, Tesla represents...
It's about 30% in one of the funds.
Well, I think it's around, in Barron Partners Fund, it's about 12% of the firm assets, and SpaceX is about 9%. So about 20% of our assets. So structure portfolios. So QQQ, Bloomberg, says that there's only two mutual funds in the United States that have beaten QQQ. It's 2,600 in the last 15 years. The Barron Partners Fund is number one. Philadelphia Growth Fund is number two. And other 2,600, no one else has come close. And so so I have shareholders in our mutual funds, and when a position gets real large, like Tesla has become, costs $11 or $12 a share, then they say, well, how can you have such a large position? And, I made an exception after we bought as many shares as we did for clients between 14 and 16, and no one else wanted to buy stock, that I went to the board of our funds. I said I wouldn't buy any more stock, but I have to buy this stock. I'm not taking any corporate opportunity. All of the other funds I have already invested, but my deal with you, if you let me do it, and I said I wouldn't, but if you let me do it, then what I'll do is just make Barron Capital financially stronger. I'm buying it for them, not for me. And then in addition to that, I'm the last in, I'll be the last out. So I won't sell a single share personally until I sell all the shares for clients. And that's what I've done. So even though we've sold maybe 1/3 of our stock for clients, I have not sold a single share personally.
Yeah, very nicely said. So basically, he did have to sell for the fund because it gets too high. He did that in the second quarter of this year because it went so high. But personally, he said he's not going to sell his stuff, his shares at all. So, and like you said, actually, his two funds are the best performing, better than the QQQ. So it's quite impressive.
Yes. And, the dynamics that he's describing there are the things that make it very difficult for people to hang on to winning stocks that, you put in an allocation and say it's even a small allocation. Well, if you have a 10 bagger on one company that does great, which, Ron has seen more than a 10 bagger in the Tesla stock that he has in that fund, well, then it can quickly outgrow the rest of your portfolio and get to be not only 30% of a fund, but even larger than that. And that does cause a lot of pressure from a lot of people on Wall Street to reduce your concentration, reduce your exposure to that name. And that is the thing that everyone does, but that's his resistance to that pressure. And that even though he has sold, he's sold very small amount. He owns a much, much, much larger percentage of his original shares than anyone else, including Cathie Wood. And it's holding those, a larger percentage of those shares for a longer time that has actually delivered him these outperformance results. But it means that he has to stomach the volatility up and down that comes along with
us.
Yeah.
We're worried about the volatility. Imagine him. We're talking billions.
Yes.
Multi-billions.
Yeah. Up and down and up and down and up and down. And he, not only, so he, because of the size of the position that he has, it's very large dollar amounts, even when it's not, like, even small percentage fluctuations are huge dollar amounts for his fund. And then he has so many people that are invested in his funds who want to call him up when the stock is down and say, hey, what's going on? And so he takes the emotional beating that comes along with that conviction at a level that we as retail, like, the only person that I have to convince to hold my stock when the price is down is me. And for someone in the position that Ron Barron is in, there's a lot of other voices that participate in that conversation, and a lot of people that he has to try and convince or calm down, soothe. And so it's very, 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 very difficult to do what he has done with his fund over these past 20 years. And that's why there's only one Ron Barron, because it's very hard to do.